you want to know what the day of an active trader looks like in Samuel & Co trading?
Hi guys, I'm Samuel Leach. I'm the founder of Samuel & Co Trading. I started the company all the way back in 2012 and I am the founder. I got really interested in the markets when I was studying at West Herts College in Watford, where I'm actually now an enterprise advisor to the college itself. I just wanted to do more. I didn't want to be sat there doing a mundane job that I didn't enjoy doing. And I really wanted more for myself, more for my family, and to really be successful. So started sort of looking up highest paid jobs, and it was either working on an oil rig or working within the banking sector. I didn't get on an oil rig, if you haven't guessed. I ended up working at one of the leading independent private banks in the UK, and that's how my career started. At the very top in my eyes, it was a dream to be able to work at a private bank at the time. I was actually in the IT team, so I wasn't trading at the bank. I don't want to give that perception, but I absolutely loved looking at what wealth management were doing, what positions they were taking, trying to work out their thought process behind that, and overall implement that into my own trading and sort of get a better understanding of what they're doing. And that's where my love for the markets really started. I saw the highs, I saw the lows of the results of a good week and a bad week from a good perspective, and that's really where my love for the markets started. I do have a degree, but I never really wanted to go to university, so when I went to a sort of like degree open day, I kind of fell into a trap of, you know, if you come and do this degree, you can go into 70% of job roles. And I thought, well, that's good because I've got no idea what I want to do. So that's why I went for marketing and advertisement as a degree. I thought no matter what business I get involved in, it's a good way to understand. I can go into business, I can go into project management, I can go into marketing, I can go into advertisement, I could go into PR, I could go into finance, I could go into quite, you know, a vast amount of job opportunities. So I felt that I was covering myself by doing something very open. So I do have a degree at university, of which I feel helps me now with my company for sure. For my qualifications, I do have level 5, level 7 in financial trading diplomas. Have both of those equivalent to master degree level. Which is something that Samuel & Co actually implements at our company and is definitely worthwhile in studying. On top of that, I was FCA regulated through appointed representative for 2 years until Samuel & Co stopped providing regulated activity and focused more on our education and providing that to the wider public. So I've got a vast knowledge within this space for sure. From an academic level and from working within the banking industry.
So I've just got into the office. Actually, I don't spend too much time here, so just to get a view of my day in the life, I don't really spend much time here in the office at all anymore. I actually have moved to another country, so I live there and then I come over here for maybe a week every other month to catch up with staff, have my meetings, see what's going on, and obviously back in my home I've got my trading set up in my own home office, and I trade there. One of the biggest trades that I'm in at the moment, that my main focus on, is natural gas. I was buying up natural gas. We had a large amount of snowstorms coming through into the US. I'm sure we can show you some of those news articles that came out, and everybody sort of, well, you should know that prices that drive natural gas is obviously demand from consumers for heating and so on and so forth, but also from a manufacturing perspective as well. And so my main focus around that was seeing that, you know, we do have in excess of nat gas in storage as we speak. We're actually above a 5-year average at this moment in time. But we're also at a very cheap price. We're down at 2. So now when we talk historically about natural gas prices, you can see, looking at that chart, that natural gas prices very rarely drop below 2. You sort of, the low has been sort of like 1.6, and that's sort of been since 1998, to give you an idea. So when we think about that, we're talking over 25 odd years. And I do believe that we can fall back to that sort of average of 4, you know, which is a 100% move theoretically in natural gas prices. So I've been focusing a lot on natural gas and that aspect. Even talking about snowstorms, you can see a little bit of footage here of my place getting hit with snow. Never seen any snow like it before, and nearly got stuck just going out and about. It's quite entertaining. Overall from that, we've seen this whole banking collapse around SVB, Signature Bank. I mean, Credit Suisse looks like it's taken an absolute toll. To give you an idea of filming, today is March the 15th, and ChatGPT predicted that the markets would crash today, and they're not far wrong. The markets are selling off aggressively. We've had a lot of these issues around regional banks collapsing, and also depositors been uninsured. We had President Joe Biden come out and obviously ensure protection of that, but there's a lot of contagion at the moment and a bit of a run on the banks. And I feel that, you know, potentially now we could see a bit of a tipping point, because Credit Suisse is getting absolutely hammered pre-market. And I think that with that in mind, we could be seeing a lot more trouble coming if Credit Suisse also follows suit with Signature Bank and SVB. So what am I doing in that respect? I'm then focused on the volatility index. The volatility index has gone from, God knows, 18 up to 28 in one day. I'm now reviewing that and looking at that for interest. I may be looking at a short sell from 30 plus on the volatility index. And there's been a lot of news around the banking side, so we'll give you a little bit more of a rundown of some of the news blurbs behind the banking side.
From Credit Suisse to crisis. They say all press is positive, but Credit Suisse has had more than its share of bad headlines.
So we're at this moment in time with the S&P selling off aggressively, keeping close eyes on what does that look like from a hedge perspective, looking at the volatility index. So a lot of my focus at the moment in time is monitoring that situation. How does that pan out? Are we going to see more contagion across Europe potentially and the UK, or is it going to be mainly within the US?
What's my biggest win in trading? My biggest win in trading, to be honest with you, again, it's very controversial, because my first one was actually reasonable. It was a penny stock, and I didn't mind having that. That was quite a good one, of been 1,000% move. That was amazing. But I have to actually say, on my Binance account, I just used to convert any small crypto that I had, like I'm talking like small percentages, into BNB, which is Binance's own token. And they just do like roundups, where you just round up all your small crypto tokens that you had and put them in there. And I did that, and I think it ended up in like $2,500 dollars that was into that account. So based on the biggest win, I'm talking about percentage gain, to be honest, and monetary actually, I'll go down that one as well, is that, you know, I left it there and I just forgot about it, if I'm honest with you. So it wasn't really, I would say, an educated trade, that one. Peer TV, going down that route of making 1,000%, that was all planned, so that was all strategy. Before that, and that was 1,000% gain. That was like 10,000 into like 100 and 110,000 pounds. That was a big trade. All worked out mathematically, all worked out based on my strategy of why I wanted to do that. Whereas the Binance token was, I did it, left 2.5 grand in Binance token, and I got an email like 2 years later, and there was like, you need to verify your account, so on and so forth, otherwise your account's going to be closed. And I was like, fine. So I logged in, and it was like, you're down 3,000 on the day. I was like, you are? how am I down 3,000 on the day? And the balance was 160,000 US dollars. I was just like, what? So that was when Binance token went from like a couple of dollars, like all the way up to like 400 plus. So yeah, it was a huge percentage gain. So got to be in it to win it. So that one was a bit of a fluke. I don't mind saying that, but other than that, it was in the stock market. On the flip side, what's my biggest loss? So back in 2015 was my biggest loss. August 24th, which was the Dow Jones flash crash. It was pretty mental. The Dow fell, I think, like 16% in a day.
53, so 90 handles, that's too much. Talking about 1,000 Dow point, you know, it's just too much.
All it took was a matter of minutes and nearly £570 billion was wiped off US share values in Wall Street's infamous flash crash.
And I got absolutely destroyed. I think that was quite early on in my career, like, you know, I'd probably say I was 5 years in, so haven't seen anything like that happen in a day. And I thought we'd bounce back, and we got slaughtered like lambs. I think I lost £50,000 in the couple of days around that. And back then that was quite a hefty chunk of money for me. But yeah, it was painful. But you take the good with the bad. And I suppose when you weigh up my biggest win against my biggest loss, it's not too bad.
This video is sponsored by Active Trades. They've got really tight spreads and fast trade execution in under 4 milliseconds. Be sure to check them out in the description and let me know what you think. So guys, it's 11 AM. I like mixing up my day, so I'm just about to jump onto my podcast, Wise Wealth. I'll put the link in the description for you actually. We've interviewed some awesome guests. We had the one of the ex-directors of Goldman Sachs. We've had one of the ex-CEOs of CrowdCube. And talking about investing into quantum computing, which was absolutely awesome. And we're going to be interviewing a really cool guest called James Kilpatrick, who's a venture capitalist and working with Gravity Labs. And it's all about investing in space, what that looks like and what that sector is, sort of how it's developing. And I think for someone like myself who loves investing, can't get enough of this, and I use Wise Wealth actually as a great avenue to speak to very interesting, very affluent and very sort of experienced investors in their own right and in their own sort of sector. So really looking forward to dig a bit deeper into this and find out a little bit more about space.
Okay, everybody, welcome back to Wise Wealth Podcast. I've got a very exciting guest with us today, James Kilpatrick. He's going to be giving himself an introduction to what he's doing. Super excited to get the conversation going, so let's jump straight in.
As a trader, I'd say my risk appetite was rather low risk. I think I've got like 3 categories of my own risk. So generally speaking, when I'm trading in foreign exchange and FX, I'm risking 1% per trade, maybe even 0.5% per trade. That's my foreign exchange. When I trade stocks and physical equities, I have a larger position size, maybe sort of like 4 or 5% of my portfolio in each individual stock, because I believe in them long term and I'm holding them long term physically. I have no leverage on them and it's something that I believe in. So that's pretty much my main blue chip equities. And then also short sell shitty penny stocks that are literally just hyped up, no money, no cash flow, gonna go bust in 12 months. So I like shorting into penny stock rallies. And again, I risk 1 to 2% on trading that, and that's great money. You know, I also like just predicting that these are crap companies that are going to go down. So I'd say my risk appetite is very, very diverse. And then if you see like black swan events, like as in this is a huge opportunity that you're never going to see for a while, then yeah, my risk appetite goes through the roof. And that's happened once before when oil went negative and I managed to buy an ETF in the low. Well, I think it was like $8. I managed to buy the oil ETF at for a buy long, and then look at oil, went from like 8 to over 120. So if I see a black swan event, I'm going to put my money where my mouth is and go big. So yeah, it just depends on the scenario really. On a day-to-day, I would say I'm low risk, very calculated. And my main fund for trading is everything that I've just said, but predominantly trading the VIX, which is low stress, high reward, very calculated, quite simple. Yeah, and I suppose for anybody watching, if you are interested in the VIX trading, I'll stick a link in the description and you can check it out. It's a great tool to add to your basket of assets that you want to trade or have some sort of exposure to.
So guys, it's 6 p.m. It's been a really long day today. We've been going through so much today, different meetings and so on and so forth, and that's mainly because I haven't been in the office so much lately. So we're now at that time where we have weekly classes coming up, 6 p.m, runs through till 7:30 p.m. And that's every Thursday that I do that, and I have done that actually since lockdown. And I meet up with roughly 50-60 traders at a time to basically, we go through the review of what's happening in the markets on the week. And obviously this one's going to be a really important one, talking about what's happened with the banks, Credit Suisse, obviously regulators stepping in there, giving them a bit of a buffer. We've had the ECB interest rate rise come out today, 0.5%, 50 basis points. So we're going to discuss that, how that's going to affect our short-term outlook on the markets. Have a look at the banking sector as well, see where the risks are, see where the opportunities are. So let's get started.
So how's everybody's week gone, percentage-wise? Let's get everybody to run meter percentage-wise. 0, holding natural gas, missed the VIX. Yeah, so VIX was one where I'm still nat gas long, but the swap fees, like my actual trades, if I'm looking at my chart, let me quickly show you. So I feel like even though I'm nat gas long, you can see like my trade there looks up nearly 7,000, and then I've got two that are down 1,200. So I'm only up 3.6. The swap fees at the moment are nearly £2,000.
I've been in the game for a long time and I run a lot of businesses. So I think focusing on things that are more longer term now for me is sort of my goal. I've had that building up the capital. Don't get me wrong, I still like to trade FX. I'll still live stream on YouTube, me trading when I'm sat at my desk, but I'm definitely doing a lot more things. And with the market pullbacks that we've seen, especially this year, there's some big blue chip companies, billion plus market caps, that are 50% off their highs, 60% off their highs, that are great companies. So you have to weigh up the value cost of sitting there and me targeting 4% monthly gain on FX, or buying a $1 billion plus market cap that could make 40-50% within the next 12 months. It's weighing up my cost of time, where I focus that. So yeah, I'd say I'm predominantly a long equity trader for blue chips, which is my main focus of loving that research. I also invest in some growth stocks, and then I short the hell out of crappy penny stocks and trade the VIX. The VIX is, to be honest with you, has become more like bread and butter for me of trading. I made 100% gain on my portfolio aside just on one VIX account in 2022, and I plan to sort of at least do 50% to 100% this year on trading the VIX as well. So a lot of my time now is spent with consulting different firms, different companies, providing steering across my companies, and that takes a lot of time and a lot of meetings, and that means that I can't sit there trading 5 minutes, 15 minutes on FX as much as I would like to. So focusing on equities gives me similar, if not better gains long term with less screen time. It allows me to enjoy my time at my country house, enjoying dog walks, enjoying getting my head into different companies, different businesses, working out where there's improvements, things like that, and also developing algorithms as well that trade the markets, which is a love of mine because it makes everybody else's trading more efficient and more streamlined.
So guys, thanks for watching. This video was brought to you by Active Trades. They've got their own intuitive platform called Active Trader, where you can trade highly competitive CFDs on global asset classes. Enjoy guys, make sure you thumbs up, comment and subscribe.